Okay, guys, let's talk about Micron stock. A lot of people have made a lot of money on Micron, and we have reason to believe that people will continue to make tons of money. So let's jump right into it, folks. First of all, I wanted to share with you guys why I'm qualified to talk about stocks here. If you look at your screen, $2 million net worth, almost $900,000 in stocks. Of course, I've built my wealth investing in stocks and real estate. So I think I'm a little qualified to talk on the subject. But in any case, Micron stock over the last year is up 800%, massive increase. Let's talk about the stock, why it went up, why we think it's going to continue to go up if I'm potentially buying. Sneak peek, I'm considering putting 10K into the stock, but we'll talk about that later in this video. Micron Technologies, guys, they essentially make memory, which is at the core of the infrastructure of the artificial intelligence build out. So all of these data centers being built out, they need memory. And over the last few years, the demand for these has skyrocketed. And this has essentially reached like an insatiable level where the demand is basically unlimited. So let's take a quick look at what happened with the stock this month and how that correlated with their earnings. So over the last, let's look at year to date actually. It's up 265% year to date, 922% over the last year. And if we look at the earnings in Q3, earnings per share was $25 per share, which was a 20% beat. And this was already a massive increase. Revenue was 41 billion. It was estimated to be 35 billion. Again, that was a 15% beat. And these were already massive estimates to begin with as far as year over year growth. So let's take a quick look. Micron shatters records with massive Q3 beat. Micron reported a record EPS of $24.67 per share on 41.46 billion of revenue, significantly outperforming estimates of $20.71 and 35.82 billion in revenue due to an insatiable AI-driven demand. Now, one thing that they think is very strategic here is that they've issued strong revenue guidance of 50 billion in Q4, and they revealed that they signed 16 customer agreements securing a minimum of $100 billion in contracted revenue through 2030. Now, this is helping kind of calm people's fears that this boom and bust cycle could happen quickly, as it did previously. Back in 2023, Micron stock actually crashed as demand for their chips plummeted. And this is normal in the chip space. Like it's very cyclical. So you have these boom and bust cycles. And basically during the pandemic, everyone was working from home. People wanted to stream on YouTube. So the demand for devices and chips and gaming computers skyrocketed. And then really in 2022, 2023, that demand crashed when people started going back to work. A lot of these manufacturers and these retailers had a lot of chips on hand, and then Micron stock essentially crashed. And then subsequently, the build outs of the data centers led to a massive demand during a time when Micron was actually scaling back on creating these chips because demand was low back in 2023. So now we have really this perfect storm where prices are skyrocketing, and really they have extraordinary pricing power, right? Extraordinary. They can basically charge whatever they want for these chips. People are throwing money at them like crazy, and profits are going through the roof. So let's take a quick look. Top analysts are setting jaw-dropping Micron stock targets after surge. Just to take a look back here, Micron, it's about $1,000 per share, 1,039. And I want to talk about one thing that people point out, right? So the stock already skyrocketed. So people say, well, we probably missed the train, right? Now I want to take a look back at Nvidia stock. If you look back Okay. Sorry about that. If you look back at NVIDIA stock in 2020, it was $12 a share. Going up into 2021, it was $30 a share. So it almost tripled in less than 2 years. At that point, at $30 a share, people thought it was insanely overvalued. It had tripled in like a year and a half. Then, of course, it crashed back to like 12. And mind you, back in early 2020 was $5 a share. So it went from 5 to 30. It's 6x. People thought it was massively overvalued. Now it's at 200 a share. 200, right? So people think Micron could follow that same kind of trajectory here where it already skyrocketed, but they have again $100 billion in contracts over the next 6 years. People think we're in a paradigm shift where not only do we have these data center build outs, which are not going to stop, they're going to continue. Now, a lot of people speculate that demand could slow down, in the next few years because AI might take a little longer to be adopted than people think. Even if that's the case, in the long term, these data centers are going to continue to get built out. Chips are going to continue to be implemented in everything cars, phones, computers, everything is being infused with technology. Smart homes are becoming a thing, right? People have more devices than ever, smart home tablets, dashboards in their house to control everything. Everything is going to run off chips. So we have reason to believe that this is most likely going to continue. And because of that, a lot of analysts are saying that in not too long from now, this stock could be worth over $2,000 a share. Again, we're currently at about $1,000 per share, 1,044 as that ticker keeps moving. A lot of analysts are saying we're going to be at $2,000 a share. And this is having major impacts not only on the price of chips for these data center buildouts, but it's also increasing the cost of things across the board here, right? Like companies like Apple, you've probably seen, they're raising the prices of a lot of their devices massively because they use these chips. And Apple's really blaming the memory makers, saying, hey, we have no choice but to raise prices on you guys because chip makers are raising prices on us. Chip makers, Micron turned around and said, hey, if Apple wasn't buying so many of these things at once, then the chip prices wouldn't go up so much, right? And Micron actually called out Apple specifically because well, maybe not specifically, but indirectly, it seemed like they were calling them out because in 2023, when chip demand plummeted, companies like Apple were going to Micron and saying, hey, these chips are cheap. We're going to aggressively try and lowball you and lock in contracts as cheap as possible. Well, now that's coming back around. Tables have turned, and Micron essentially has unlimited pricing power for these chips. And we're starting to see that in things like Apple products going up, which is, of course, going to lead to more inflation, right? As things cost more to produce, those costs are passed on to consumers if the consumer's willing to pay for them. And then things get more expensive, and of course, that leads to inflation. And that's something we need to talk about as well, as inflation recently was 4.2%. Inflation, folks, if you look back, it really bottomed out in right around the time Trump took office at about 2.3%. So I think it was at 2.9 right before he took office, then bottomed at like 2.3 in about April. Then when he did the tariffs and he did, this war with Iran, now inflation has almost doubled since then, right? So whether or not you like Trump, he's really screwing up the inflation situation. And because of that, this could lead to short-term pain, right? So we have the Fed hinting at, well, first of all, the new Fed chief is trying not to talk, but essentially he wouldn't give guidance is what he's trying to do. In my opinion, he wants Trump to really control the narrative, whether you agree with that or not. So essentially, he won't say, what they expect to do, but he did say inflation is too high. So what happens when inflation is too high? At best, you're going to keep rates the same. At worst, you're going to raise them. And the narrative on raising rates is really starting to increase, right? It really starts to increase when you see inflation go from 2.3% about a little over a year ago to 4.2, right? That's a massive jump. It really is. So rates could tick up a little bit. That means things could keep getting more expensive. Your debt could get more expensive, your credit card bill, any variable rate interest debt that you have. And a lot of people think inflation going up, rates potentially going up, which are already high, the cost of things going up with, chips making devices more expensive. All of this could potentially push us into a recession in the next year or two. Now, we've been talking about recessions basically since 2020. We've never had a real hard recession since then, maybe a technical one for a few months. But that could potentially lead to a pullback in the stock, right? If we do have a recession because things are too expensive, we do have a slowdown in build out of data centers, yes, this price could pull back. But if we look at NVIDIA again, NVIDIA crashed and then it skyrocketed again. So a lot of people thinking that people could make millions in the years to come on Micron. Let me know your thoughts on that in the comments below, guys. As far as me personally, again, I do have a $900,000 stock portfolio, considering dropping 10K in Micron stock in the near future, but I will keep you posted on that, guys. And if you like this content about stocks and investing, please subscribe. Let me know your thoughts on Micron, and I'll see you on the next video.